Hi everyone, welcome to my channel. In this video I am going to talk about how to finance a commercial property, because if this is something that you do not know, or if this is the first time you are hearing about this, that how to finance a commercial property, so wait till the end, because there are a lot of information that you are going to get which will help you to understand and particularly talk to your mortgage broker about this. So without a further delay, let's go into it. First of all, let's understand that commercial property finance. One of the drawbacks of commercial property is that when you purchase a commercial property, you need to pay a higher deposit. So in other words, bank is not going to lend you 80% or 90% or even sometimes 95% the way they do in residential property. That you will not get the loan in commercial property. So what are the ways that you can do? You need to pay a higher deposit. That's the one drawback. So sometimes bank is going to give you 60%, 65% and at max 70% loan. So the first thing first, if you have 30% deposit, which is significant amount, right? For $1 million property, let's say 30% is about 300,000. So if you have that $300,000 cash plus some stamp duty and other cost, about let's say $50,000, then you can purchase that property irrespective of your income, because bank is going to lend you generally with that commercial property of 70%. Now, if you cannot do this, so that's the best case scenario. If you can do this, that's fine. That's the way you get loan. So right now, let's say if you have $350,000, you can look for a $1 million property and finance that as well. Now, to finance that, there are two ways you go. One is something called a low doc or a lease doc loan, and another way that is called a full doc loan. Now, full doc loan is just like a residential loan where you provide all your details and all the documents about your income, about your expense, what are the different assets and liabilities you have. Based on that, bank is going to assess you and will give you loan. That's the full doc loan. Now, in commercial term, there is something called lease doc loan. What is lease doc, or the kind of a low doc loan? A lease doc loan is that the bank is actually looking the property, and that property itself is going to finance that your loan. So based on that, the bank will say that yes, and the property's income, we would lend you 65% or 70% straight away without knowing anything about your finance, without knowing anything about your other income, without knowing anything about your liabilities. So now extrapolate this. Let's say if you give your son or daughter who is just become 18 a $3 million, technically they should be able to buy roughly about, let's say, $10 million is property, because it doesn't matter what they are earning. Through this lease doc concept, they would be able to get that loan. And that's the beauty of commercial property, which is not possible in residential property, because no lender will lend a $10 million residential property if that person becomes just 18 or do not have enough income. So that's the difference between lease doc with a full doc loan. In full doc, you need all these documentation, where the lease doc is based on the property. The second way that you can finance your commercial property is what I call residential property tied up. And that residential property could be your own home or an investment property. Let me give you an example. When you want to purchase a property of, let's say, $1 million commercial property, it could be a shop, it could be industrial property, it could be a medical, whatever be the case. Let's say bank says that yes, we are going to lend you based on your circumstances 70%, and 30% you need to get from your own pocket, but you do not have that 30%. That's fine. Do you have any other equity, which is like your own principal place of residence, or do you have your other investment property which has gone up, maybe you bought it 5 years ago? Then those investment or those kind of assets you can tie up with your property, and potentially you can just stack the deal, like that 70% will come from my commercial property, and the other 30% I want to tap the equity from this residential property, or I want to tap the equity of my home, and that way you can stack the deal. And this is called the residential property tie-up. So in a nutshell, you can actually get 100% loan and you can buy that commercial property. And think about that. If your interest rate is about 6% right now, and if you can get a deal of 8%, just for argument's sake, that means that 2% difference, if you can stack that 100%, you get roughly about 20,000 extra income for that $1 million deal that you just did not pay anything. Perhaps you just paid stamp duties and all, but mostly you are getting that 20,000 extra by just stacking up the deal. And as long as you can see that the property price is going to go up, in other words, the rent is going to go up in commercial property, plus your residential property is going up, then eventually you can see that it's a long-term point of view, you're always making money. So sometimes you can think of stacking the deal like this, which is tying up with your residential equity with commercial property, and play both in residential as well as commercial sector, whereas you can see that your cash flow is going up at the same time you are getting the growth. So this is another way that you can finance your commercial property. Another way that you can do this is to approach to like a non-lender. Sometimes, you know, the big four banks or even the traditional banks, they are not going to lend you more than 70%. That doesn't mean that all these non-traditional lenders are, such as smaller lender, they are happy to give you 80%, sometimes 85% with the highest interest rate, such as like a standard interest rate is, let's say 6%, you might get it 8% interest rate, but you can get with an 85%. Now this, you might sound that, so man, why would I pay 2% extra interest? I don't know, then it will become a negative cash flow. But that is only for short term. Think about it. Let's say if you buy a $1 million property and you have, let's say, only 200,000. You do not have 300,000. So there is no way you can go with a traditional lender. Now that same 1 million, if you take the loan from a non-traditional, which is like let's say 8% interest, yes, on the first year or perhaps the second year, the rent, it is going to be negative cash flow. But look at this, what's going to happen. If you can buy strategically, and if you see that in 3 years down the line, that $1 million property becomes 1.2 million, all of a sudden now you can see that you come up with like a 70% LVR situation. And as soon as you get that 70% LVR, then you go to refinance this to a traditional lender. So you just missed, or rather you paid the interest rate more only for 1 or 2 or 3 years max, because 3 years is enough time to get that equity or the equity uplift or the growth uplift, so that you can go to this traditional lender of a lower interest. So now you need to calculate how much extra interest you are actually paying for the next 3 years versus is it worth going to that deal. And this is another way you can stack up, because if you are young and if you really want to get into this commercial, sometimes you have to go a little bit of aggressive way, so that as the time progresses, as you see that the price goes up in the sense that the rent is going up, then you would be able to refinance this to a traditional lender and you can get in a better situation. So if you are like 30 years old and if you never bought a commercial property, and you can stack the deal like this, and eventually once you'll become 35, 37, you'll see this property is going up and the rent is going up, and it will be much easier for you to get better cash flow. So this is another way you can stack up the finance if you are not getting a loan in a traditional way. Now one thing that I would like to cover, which is often talked about, is called ICR. ICR stands for interest coverage ratio. What is ICR? Means when you take a lease doc loan, in that lease doc loan, bank is going to see that what is that ICR or interest coverage ratio is. Now it depends on bank to bank. What you can do is that to check a particular lender and then ask them what is your ICR, and most of the cases right now it is about 1.5%, which means 1.5 means if you look for a property and that property is just giving you, let's say, 70,000 return or 70,000 net rent. So what bank does, that 70,000 divided by 1.5, which is like about $42,000 or $44,000. That $44,000 is with a 6% interest rate is, let's say, about 700,000 you would be able to borrow money for that deal. So that's again 70%. So ICR is important. That means that if the rent is more, then you'd be able to get to the more LVR. And again, remember, banks sometimes limit it to 70%, but if the rent is high, then you can challenge them and ask them that, oh, why can't I get more than that, because the rent, that ICR, interest coverage ratio, is enough to get higher loan. So talk to your lender or talk to your mortgage broker, ask them that, okay, if I buy a $1 million property and if the rent is coming 80,000 versus if the rent is coming 60,000, what is the maximum amount of loan that I can get for this property? So you can play around with this by understanding this ICR, which is called interest coverage ratio. I hope you find the value with this video. Remember, finance is a big topic, so by all means talk to your mortgage broker. Remember, when you're talking to a mortgage broker, talk to a commercial mortgage broker, not a residential one, because this is a completely different language that they speak, and it's also a complete, because in a bank also, a commercial lending versus residential lending is two separate departments. Is as if like you're talking to a two different bank, you're talking to two different languages. So by all means, always talk to a commercial lender when you are taking loan for the commercial property. Never ever go to a residential lender, then you'll always end up with situation like, oh, you do not have the borrowing capacity, you do not have these things, like you can borrow this, but that's not true. In commercial property, you can always get loan if you approach to a commercial lender. And if you don't know any commercial lender, by all means talk to us and go to our website and fill up the details, and so that we can also channelize you to the right commercial lender and you can get that loan. I hope you liked it. Thank you so much for watching. I'll see you next time. Bye bye.